Hey, it's Clay Trader, and this will be a video chart on ticker symbol AUPH. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price. And in this situation, makes mapping out a very logical question quite straightforward. And that question revolves around the fact that, of course, a very crappy day, especially if you bought before today. But after the gap down, the price did go down and down and down. But to give some credit where credit's due, the price did start to show some signs of life and bounce, which brings about the logical question: is there any sort of strength behind this bounce? Is there any sort of true power, or is this just some sort of, dead cat bounce, fake bounce? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And it all revolves, in my mind, around a single level. And that level is right here at the $2.10 mark. Why is $2.10 so important? Well, hopefully we can all agree on the logic that a bounce that's truly a bounce is going to continue to bounce. It's going to continue to progress forward, right? It's not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, if a bounce is really a bounce, then it's going to keep on going forward and not go back to where it was. So with that in mind, think about $2.10. Any sort of closes below 10 cents, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting the price right back to within this range where it already was, near the lows from today. And again, going back, not a sign of strength. Whereas let's say the price heads down here, bounces around, and then heads back up. Now that's kind of hard to see, but you get the point. Bounces around 210, right around that region, and then starts to head back up. What would you have in that situation? Well, you'd have a set of lows right here. You'd have this previous set of lows down there. If you picture each one of these as stair steps, well, hey, now you have stair steps starting to progress in the upwards direction. And that's what true bounces do, right? They start to put in higher lows, and as time goes by, you can start to draw the uptrending trend lines, and that's the name of the game. So is today some sort of bounce? Well, I don't know. Let's just see if the bulls can continue to make progress, and I'm defining progress as staying up above $5.10. What about areas of resistance? The key short-term area of resistance, and I'm sure if you're watching the level 2s today, then you notice whenever the price got right up around $2.16, bulls could just not muster up enough energy to push through it. So 216 is going to be that initial area, and then after 216, next level up there at $2.20. So a lot of eyeballs on this one today, a whole lot of volume, and we will see tomorrow if this bounce has some sort of true strength behind it or not. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.